In this video, traders, we're going to talk about which lines should we be using as a reference point for our trades. We've got support, we've got resistance, we've got fib, we've got open, we've got close, we've got moving averages, we've got all these lines. Which ones are actually important for our trading? Stay tuned. Hey guys, a very warm welcome to you. Alright, so this video is sponsored by a channel sponsor, and check them out. There's a link to them in the description below. CFDs, spread bet, regulated in different countries, so go and check them out and see if they're right for you. Multiple different markets, MT4, C Trader and MT5. Anyway, what I want to talk about in this video is, hey, listen, we know that we're trying to find an edge in the market, and very often we're going to draw our support levels, our resistance levels. We might have a moving average, we might have the open, the high, the low, the close, a prior high from multiple days ago, a pivot point, an S1 and S2. The point is, we might have so much stuff on our chart that how do we know what we're supposed to be looking at? Well, do you know what? There's no holy grail for this, guys. There's nothing where I can say, right, it's that and that's it, end of the video, thanks very much, goodbye. If there was, life would be easy. But the key to it, in my opinion, and again, guys, all these videos, in my opinion, the way that I approach things, and you know, if it resonates with you, you can utilize it. I like to look at things that I think are meaningful and other people are using as a reference point as well. Why? Because if other people are using them as a reference point, it means that they may well be initiating trades at that point. And if people are initiating trades at that point, if I can kind of work out where and how I think those trades might be initiated, I can get in front of them, and that's where I can get an edge. So let me give you an example. If we have a market that's been moving, oscillating in a 2-day range, and then we come to the third day, I'm probably quite interested in the high of that 2-day, especially if we've been uptrending and now we're kind of in a consolidation mode, because I know that many people are going to be looking at that to initiate a buy trade, whether that's a stop that's triggered because they thought that's the end, or whether it's buyers becoming more aggressive in buying the breakout, or whether it's just a natural cause of the market, supply and demand imbalance is shifting into demand. It's been sitting there, it's done a leg, it's consolidated, next leg up. Now that to me is more of a focus level than say a pivot point or say a Fibonacci put over the range. Because whilst they can all be valuable under certain conditions, in that specific example, that's not going to be that valuable. You know, no one really cares what the Fibonacci zone is or level is when we're in a 2-day range. No one really cares. No one really cares minor support within that 2-day range. I'm sure we've seen it before, guys. We can draw little minor lines and major lines. No one really cares. What's more interesting is the 2-day range high and low. So for me, that's always going to be my reference point. I'm going to discard everything else. I'm going to see how price reacts to that. Let's think of another example. Another example could be a stock gaps up on earnings. What's super interesting there? The opening print. The opening print is going to be the benchmark that I'm going to use as a reference point, because the prior low is irrelevant, the prior high is irrelevant, unless we come down to it, fill the gap, of course. Those aren't interesting levels, nor's the fib range for that, nor's the fib from the kind of close to the open, nor's really a moving average because we're way above everything. But the open, that's interesting because that's where everyone's agreed on price. If we're now NYSEs, where specialists have opened it based on supply demand, and that then becomes a good reference point. How far are we away from the open? Maybe I use a moving average as a kind of tool during the day to frame my trades a little bit, but not everyone's looking at a moving average. That might help guide me, but more important is to see how we're reacting to the open. So then maybe if we come down and fill the gap, I know that everybody is looking at the open, or everyone's looking at the prior close if we're talking about the gap, or the prior high if we're talking about the range gap fill. Everyone's looking at those levels. So those are levels that I'm going to have on my chart. So really what we need to do is we need to think of a quick checklist. So rather than being completely cluttered and having just so much stuff on that you don't know whether to use it as a reference point to pull the trigger, whether you should be taking profits, what the heck you should be doing, just take a step back and think about why you've got the level on. If it's a very, very thick support level or very, very thick resistance level based on multiple tests that it can't get through, it's been in for multiple days, that's the one you want on your chart, because that's the one that everyone's watching. That's the one that's going to trigger a cascade of orders. Now, is it going to guarantee a breakout? No, of course not. It could still fake out and whip back. But again, that comes onto the second part of it, which is looking at price response to that. So that will be our kind of key there. if the market has been trending and trending, where's our view going to be? Our view may well be then Fibonacci retracements. Now, there's a caveat there that you know everyone's not looking at it, but you also know that when the market pulls back, if you're just using history as kind of extrapolating into the future and assuming you're going to have persistency of trend, you know that when we're pulling back, you're going to find buyers at some point. So that becomes a little bit harder. Maybe you haven't got a key support level to work off there. So you might then use a fib to frame the point, or a moving average, this is where your indicators come in, to frame the point where you might start looking for reversal. And that's where your kind of triggers come in with your price action and your setups and your candlestick patterns, etc. So that may well be then your focus. I want to see how it reacts to a 50% pullback on the move. I want to see how it reacts to a 20-period moving average. We're pulling back from a strong trend, because that for you then gives you an idea whether you feel the market's going to continue. Because of course, pulling back is a bit of a different scenario than actually pushing on a very specific support level, resistance level, and open a high or lower close. So the summary, guys, is to just think about the scenario you're in. Are you in a range? Are you in trend? Are you in a gap? What are the conditions? What are the market you're trading? Is it a 24/5 Forex market? What is it? And then think about what everyone's looking at. Recent example will be we've had gold and silver breaking out to highs. As I'm filming this, show the examples when you're watching this. The reference point for a lot of people is going to be how it responds if it pulls back to that key breakout level, because everybody has it on the chart, everyone sees it. And so that then becomes your reference point, as does the place it goes to before it starts to retrace. So now you've got two reference points that you know are watching. Now, if you decide to put on something else like a fib, like a moving average, then understand that that's for you to get a grasp on price action to try to determine a good quality trade entry. That's not necessarily a level that everyone else is looking at. So guys, summary is keep it simple. Try to think about the levels that everyone is looking at rather than your little levels you think are the important ones. Have those as your main focus point, how price responds to it. And then if you want to add more to help you personally frame the way you trade it, then by all means, but don't think that those are watched by many people. Helps you keep your helps you keep your charts uncluttered, helps you keep a bit more focused, and sort of removes a little bit of noise from the game. Anyway guys, if you want to check the links to them in the description below. Otherwise, take care, keep this managed, and I'll see you in the next one. Bye bye.